Well, we'll have to see. And of course, you know, Americans, it may move the polls somewhat initially, and then Americans sort of have short attention spans, and it still is 2 months to the election, and a lot of things could happen before then. But he has been he has been behind Joe Biden in the polls consistently, and polls do show that Americans are displeased with President Trump's handling of the pandemic. Partly, he has sought to shift blame for the virus, which has killed almost 190,000 Americans now, and that is something that polls show many Americans do not favor the way he has handled it or the way he has tried to shift blame.
So, Jody, how is Biden handling this? Is he attacking the president?
Yeah, so he's quite directly attacking the president, quite forcefully, saying that he's seizing on Bob Woodward's interviews, alleging the president is responsible for the deaths of tens of thousands of Americans because he did not adequately warn of that threat posed by the virus. And of course, this issue is one that Joe Biden has been discussing on the campaign trail all summer. That this is thought to be kind of a winning issue for him. Other issues like the law and order one that President Trump has been really trying to pivot to in recent months, that one is problematic for the Democrats. So this is something that you can imagine Joe Biden is going to make the most out of as long as it's a big issue. And these book revelations tend to last, you know, for a week or two, and then something else happens. So for right now, this is a big issue, but we'll see whether it's lasting and how much of an effect it has on actual campaigning and actual voting in just 2 months. And early voting is starting in some states very soon.
Jody, thank you so much for the update. Jody Schneider, they're our senior international editor. Now, we're also getting some breaking news from the AstraZeneca chief executive. He's Pascal Soriot. He's saying that the vaccine test halt is very common. He says, of course, safety is very important aspect to vaccines. This is something that all of us know, but it was interesting just last week to have many big pharma company chief executives sign that pledge to put safety first. Of course, AstraZeneca, just a day after this COVID-19 vaccine trials were suspended, still are facing questions about why there are possible serious neurological problems in one patient. Coming up, Illy has been making coffee for more than 85 years, but no year has been quite like 2020. We'll be speaking to the chairman, Andrea Illy. That's coming up shortly, and this is Bloomberg.
Another day of risk off across the financial markets. We bring you special I'm placing a stop on profit for euro at 118.27. Okay.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
This is Bloomberg Surveillance. I'm Francine Lacquid here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The EU is considering legal action over the UK's intention to breach the Brexit withdrawal agreement. That's according to a document seen by Bloomberg. The bloc's initial analysis suggests it may have a case even before Boris Johnson's controversial plan is written into domestic law. The Prime Minister's threat to renege on the Brexit deal has also prompted a warning from across the Atlantic. House Speaker Nancy Pelosi said there would be absolutely no chance of a trade agreement.
I'm moving further. My stop on profit to 118.30.
He likes playing down concerns to avoid causing panic or indeed price spikes. Democratic presidential nominee Joe Biden said Trump failed to do his job and is responsible for tens of thousands of deaths for not giving adequate warning about the dangers of the virus. Now, 1 in 5 UK companies is a so-called zombie, with profits only just covering debt interest payments. That's according to conservative think tank Onward. It called for the Chancellor to relax the rules on virus loan repayments, warning the post-pandemic economic recovery will be hampered by crippling levels of corporate debt. It says borrowing since lockdown began threatens to push more than 4% of companies, employing almost 2 million people, into technical insolvency. And the world's animal population has fallen by more than 2/3 in the last 50 years. That's according to a study of more than 4,000 species by conservation group WWF. It found the biggest drops had occurred in Latin America and the Caribbean, where populations fell by 94%. Agriculture and land use change were a key driver as natural habitats were converted into farmland. But climate change has also been another major factor. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Italy has been selling coffee since 1933, but no year has been more challenging for the business than 2020, when many of its customers were suddenly forced to shut up shop. While looking beyond the current crisis, Italy, still run by descendants of the founder, has joined a coalition called Project Regeneration 2030. Now, the group says the next 10 years needs to see drastic change in the way we run our economy, which with a renewed focus on sustainability. Well, I'm delighted to be joined this morning by Andrea Illy. He's the chairman of Illy Cafe. Andrea Illy, thank you so much for joining us right here on Bloomberg Surveillance. First of all, let's talk a bit about your business and what kind of demand you saw in lockdown. How much business did you lose because people didn't go to coffee shops anymore? And when you're expecting a more return to normal?
Good morning, Francine. Yes, the lockdown impacted the out-of-home coffee consumption because for Italy is important. Nearly 60% of our business in the hospitality, so hotel, restaurant, cafes, and then we have significant amount of sales in the office space and transportation, airlines, trains, and ships. So all this was shut down, but the company proved to be quite reactive, and we did significantly recover in the home channel with extra sales in retail and e-commerce as well, thanks to investment that we just did last year and new products as well. So all in all, the impact is manageable.
So do you believe home consumption can ever really make up for, the loss of revenue if we don't get back to work or don't go back to cafes?
Well, consumers are the same, and so the business is to follow them where they are. And this is this Italy strategy to offer the same product, the same Italy blend, wherever consumers are. So with that strategy, if they stay at home, they can have Italy at home. If they go to the restaurants, they can find Italy at the restaurants, and so on. This strategy really proved to be effective in this special occasion.
I know we have spoken in the past about your search for a partner in the US. Has COVID, hurt that? Is that being delayed because of it, or are you close to an announcement?
There has been a little postponement of just a few weeks during the initial phase of the lockdown, but the process is continuing, and there is no significant, let's say, loss of interest from the potential investor side. The, let's say, attractiveness of the company remains the same.
Talk to me a little bit about the actual coffee market. So, did we see a price discovery? How is that going to be affected by seasonal changes, and how much does that impact Italy?
Besides the, let's say, the shift of channels in the coffee consumption that I already spoke about, as far as the coffee production side is quite regular, both in terms of volume, in activities, the crop, in terms of quality, and even the price level remain pretty much the same, with the exception of the readjustment after the dollar devaluation. So I would say the sanitary crisis, which is impacting significantly countries like Brazil and Colombia, did not yet impact, let's say, the production part, neither the economical side of the coffee sector.
Andrei, we're all looking, of course, over the last couple of days at these tremendous and horrific fires in California. And there's more and more talk as we try and transition our economy to something that's more sustainable. I know you've done a lot of work in that, especially in the agricultural field, to try and play your part. You're now part of this Regeneration 2030. Is now a perfect time because we're dealing with COVID? So does it accelerate your green efforts, or is it a bad time because we just need to have a handle on COVID first?
Well, it is an excellent time to start Regeneration 2030, because not only the double crisis, climate and sanitary crisis, do have the same root, is the impact of the Anthropocene, this era which started with the Industrial Revolution, on the ecosystems, which is causing all these kind of problems. And the idea of Regeneration 2030 is to transition our society from the current and past model, which is extractive and linear, continues to extract the resources from the ecosystems without never recovering, into a new paradigm, a new model of a society which is regenerative and circular. Whichever can be regenerated, and in theoretically all biological system, whatever is organic could be regenerated, should be regenerated. Talking about ecosystems, talking about the waters, the land, and into up to the societies, which are complex biological system. As far as the non-organic part of our society, which is the mineral part, a circular model where we definitely reduce our consumption of resources, because we cannot continue extracting so many resources from the environment and the ecosystem. So this is the idea. It's a gigantic opportunity supported by gigantic investment by the European Union, targeting very ambitious goals in terms of reduction of carbon emissions, reduction of pesticides in agriculture, and so on. And in order to transition all the society from the model, past model to the new regenerative one, a large amount of resources will be needed. Besides the investment, a lot of knowledge. This is exactly the job that the regenerative society foundation that we are going to incorporate in a few days is going to do. Produce knowledge and disseminate knowledge for transitioning any business.
Andrea, there are many questions regarding this. Do we have a common definition? Is it difficult to compare? And how do you avoid greenwashing? How do you avoid having chief executives sign up because it looks good, but actually at the end of the day don't do much for real?
The essence of Regeneration 2030 will be 3 pledges. One pledge is about the circular economy, regenerative economy, pardon me. Second pledge is about world happiness, which we understand is the main driver in terms of motivation and the final goal, which justifies the investment in transitioning the society. And last but not least, climate action. So the supporters of the program, the partners, are requested to sign this pledge and then, of course, to implement this pledge. So when you mention greenwashing, sometimes you have this British idiom, which is fake it until you make it. Sometimes corporations start with greenwashing, but then they quickly realize that they cannot cheat, and they start serious program immediately after, also because let's say the society controls. Okay.
Thank you so much for your time today. We'll have to get you back on really soon. Andrea Illy, there, chairman of Illy Café. Now, coming up, it's decision day for the European Central Bank. We'll bring you full coverage of the policy decision, 12:45 p.m. London time, followed by President Christine Lagarde's news conference. Up next, we'll discuss the future of the euro area economy with Tatiana Castro, portfolio manager at Muzinich. This is Bloomberg. watching Bloomberg Surveillance. I'm Francine Lacqua here in London. This is what the markets are focusing on today. So a lot of the focus, of course, is on this new vaccine. A lot of the focus is on valuation, certainly when it comes to technology stocks after the week that we've had. Now, stocks are slipping. The euro is steady somewhat. Investors, of course, waiting for the outcome of the European Central Bank meeting. I'm also looking at crude oil. It's actually declining, but treasuries are gaining. Now, the European Central Bank is widely expected to keep policy steady. Investors, though, will be closely watching from comments from Christine Lagarde of any hints on whether the stronger euro is actually becoming a problem for the region. Now let's get straight to the Bloomberg Business Flash. Here in London is Leanne Gearns. Hi, Leanne.
Hi, Francine. The chairman of LVMH, Bernard Arnault, did ask the French government for help to pull out of a deal to buy Tiffany. Sources say France's richest man was directly involved in the decision to call off the $16 billion purchase. Tiffany has accused LVMH of trying to leverage protests against police brutality and the COVID-19 pandemic to seek a lower price. But LVMH has formally denied exerting any kind of pressure, and Arnault said the French government requested a delay for reasons related to trade disputes with the US. Job cuts at Schaeffler spell more woes for the German car industry. The automotive supplier is eliminating 4,400 roles, more than 5% of its workforce, and is closing or selling several plants in its home market as the impact of the pandemic bites. The announcement follows a plan laid out last week by tyre maker Continental to slash its workforce by as much as 13%. And that's your Bloomberg Business Flash. Francine.
Thanks so much, Leanne. Now let's get more on today's ECB meeting. Policy likely to stay on hold. Officials, though, having to confront a slowdown in the euro area's recovery, as well as a stronger currency. Now, since March, the ECB's bond buying has averaged 22 billion euros a week under the Pandemic Emergency Purchase Program, and President Christine Lagarde will be quizzed in her news conference on market expectations for more stimulus later in the year. Well, joining us now is Tatiana Castro, Portfolio Manager at Muzinich. Tatiana, thanks so much for joining us. First, just simply on euro strength, does the ECB have to address it?
Good morning, Francine. Well, you know, they never officially admit to it, of course, but it will be something that they focus on for sure. And then we'll have to see, because clearly it's always relative value, so how much they can actually do. They will try what they can do, you know, sort of talk it down, or, you know, sort of talk the continued strength of the euro down. But then, you know, clearly it depends on also what the Fed is planning to do. And if they, you know, continue to stick to their no lower rates target. So it really plays both ways.
So, but do you think that it could become a problem? Is it actually, I mean, there are a number of problems that the ECB faces now, which is, you know, inflation, the recovery is okay, but we have a resurging number of infections. But actually, could euro strength be one of their biggest problems?
It could be, and it's not an easy one to solve because, as you say, you know, inflation seems to be stubbornly low. The Eurozone actually, you know, for a change seems to be actually being praised for the policies that they have put in place compared to other large economies. So you can see why there is this. And again, you know, is it the euro strength, or is it actually the weakness of the dollar and then clearly the weakness of the pound sterling? So those are issues that the ECB or, you know, sort of Europe find it very difficult to influence, because clearly those are issues in other countries. So to that extent, you know, there's little they can do. Can they cut rates? I mean, that would be too expensive, really, because they're already so low. So I would expect them, you know, not to go down that route. Will they do more in terms of asset purchase program? Clearly, that is widely expected, not for this meeting to be announced, but later in the year. But again, you know, that wouldn't probably influence that much. So it's really the weakness of the other currencies, I think, rather than the strength of the euro. And there is very little that the Eurozone can do about or the ECB, I would think.
Tatiana, I need to bring you actually some headlines from the AstraZeneca chief executive saying that the COVID vaccine is still possible by the end of the year. Now, this is something that, you know, we've been wondering, and that certainly has had an impact on the markets when they had to halt the trial yesterday. But Tatiana, how difficult is it to model what the economy in Europe will do? You know, how dependent is it on a vaccine, or how dependent is it on the form that the lockdown will take?
I know there's a lot of hope on the vaccine, and clearly that would be a huge positive development. But at the same time, for instance, me personally, I don't think sort of the second wave is such of a concern. Nor do I expect that the vaccine will bring everybody back, to the same behavior that we had before the pandemic started. So yes, of course, it's positive because it's likely to save lives and it makes people more confident to go about their business again if they have the vaccine. It will take time, for it to actually be implemented. To vaccinate, so many people will take some time. But clearly, that is sort of, the real economy effect in terms of the financial markets effect. If a vaccine was in place, I would think that will help to fuel the rally further.
Tatiana, thank you so much. Tatiana Castro, their portfolio manager at Muzinich & Co. Now, coming up, the EU considers suing the UK. We'll stay with that story next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, the European Union is considering legal action against the UK over plans to breach the Brexit withdrawal agreement. According to a document seen by Bloomberg, the EU believes it may have a case even before the UK's internal market bill is written into domestic law. Now, for more, Bloomberg's Maria Tadeo joins us from Brussels. Maria, what are the options that the EU is actually exploring?
Well, Francine, what we know is that the legal team working for the European Commission has already started to look at that bill that the UK government has pushed through, which would undo elements of the Northern Irish Protocol that was agreed by the EU and the UK. And the European legal team does believe there is a case to be made that by taking unilateral action on a deal that was agreed by two sides, there is a breach, what is a clear breach of an agreement that the EU very much still believes is legally binding and should be respected. So what they argue is that there is already a case that could be launched, and also that would open the door perhaps to some type of penalty to sue an action and to see some kind of perhaps financial compensation if that was the way to go. It doesn't mean that politically we're headed that way, but the legal team looking at this already believes that this is or would be a clear breach of an agreement between two sides.
So, Maria, again, the million, gazillion, trillion dollar question is how much of this is negotiating tactics and how much is it actually a real risk of a no deal?
Well, Francine, this is really the real question happening today in Brussels. We knew that the negotiation had taken a much more aggressive tone over the past 3 days, but this has really taken a lot of officials aback because you're now going from language to a legal text that would have legal consequences. One of the theories that is kind of floating today in Brussels is that this is almost the UK in a very Machiavellian and also very perhaps intentional way trying to trigger a crisis to get a reaction out of the European leaders. For weeks we've heard now from the UK team that Mr. Barnier has been stuck in the negotiations, that there needs to be a political push now, and this is really the moment where EU leaders have to get on the case. So perhaps by doing this 2 weeks before they come to Brussels for a meeting that's scheduled for September 24th, that would trigger a reaction from the likes of Emmanuel Macron, Angela Merkel, and perhaps create some type of leeway for a negotiation, but it's a very high-risk strategy.
Thank you so much for joining us, Sarah. Maria Tadeo there in Brussels with the very latest. We understand also there's an emergency summit, as Maria was explaining, and Monsieur Michel Barnier is here in London. Now, a couple of things I need to bring you up to date with. First of all, the markets. So let's look at the markets and have a look at exactly what they're focusing on. European stocks are sleeping. I'm looking at my screen right here. I think we can also bring it up on TV for you guys to have a look. Euro is pretty much steady as investors waiting for the outcome of the European Central Bank meeting. I'm also looking at crude oil declining, treasuries gaining. Now, if you're Madame Lagarde, I guess you have something that you need to decide on, whether you comment inadvertently on the euro or not. So investors will be closely watching comments from Madame Lagarde for any hints on whether a stronger euro is becoming a problem for the region. Then I also need to bring you up to date with the various headlines from the AstraZeneca chief executive saying that the COVID vaccine is still possible by the end of the year, and they will manufacture close to 3 billion vaccine doses. He still says that health and safety is the most important thing. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Growing confidence. The euro rises as ECB forecasts are set to show a more optimistic outlook. Investors look for clues on extra stimulus at today's meeting. Trump on the defensive. The president contends he was right to downplay the severity of the coronavirus after comments made to journalist Bob Woodward earlier this year became public. And lawmakers become lawbreakers. The EU considers legal action over the UK's plan to breach the Brexit deal. The two sides hold an emergency meeting today. Well, good morning, everyone. This is Bloomberg Surveillance. Francine Lacqua here in London, Tom Keane in New York. Tom, I'll give you your Brexit briefing in a second, but it was interesting just moments ago hearing from the AstraZeneca chief executive. I know that's why you get up in the morning.
Yes.
Mr. Pascal Soriot of AstraZeneca saying that actually he's putting safety first, but he can still deliver a vaccine by the end of the year.
It's nice to see the buzz here one day on, and I thought our coverage yesterday with Dr. Fazili was really quite good, and that, you know, this evolves over time, and AstraZeneca's managing the message forward. And, you know, within the pandemic, it's a big deal. I mean, it's, you know, the news flow is extraordinary, but that was not a small item yesterday to see that first failure of a phase 3 trial.
Absolutely, Tom. And I think the next question is, if we do have a viable vaccine, how many people will actually take it voluntarily? So we'll talk a lot more about that in coming days. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. Joe Biden says President Trump willingly lied about the threat of the coronavirus posed for months. The Democratic presidential candidate spoke after the president's comments to journalist Bob Woodward were revealed. President Trump told Woodward in March he intentionally downplayed the severity of the virus in public to avoid panic. The interview was conducted for Woodward's book that's being published this month. JP Morgan has found that some of its employees improperly received coronavirus relief funds intended for American businesses. Bloomberg has learned the bank noticed that suspicious amounts of money have been deposited into workers' checking accounts. Some employees have been fired. JP Morgan isn't commenting. The European Union is considering legal action over the UK's plan to breach the Brexit deal. Prime Minister Boris Johnson has said it's ready to break its own commitments to the EU over the Irish border. The two sides are holding an emergency meeting today. And the Trump administration and TikTok's parent reportedly are talking compromise. According to Dow Jones, the two sides are in discussions about arrangements that would avoid a full sale of TikTok's U.S. operations. President Trump has said if there's no sale by September 15th, TikTok would be shut down in the U.S. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities on a day of the ECB and typically quiet here after the big lift yesterday off the ginormous drop the few days before. Futures at -18, Dow futures -143. The VIX not up a full stick, 29.66, showing that recovery from a 34 level down right now to 29.66. A 10-year TIPS at -1.02 shows the stasis that we've seen in the bond market. And I put in here, excuse me, I put in here euro renminbi at 8.09. This has been a long-term euro strength versus China. It's a pair we don't usually look at But nevertheless, Francine, on a quiet day-to-day, the relationship and triangulation of Europe with China and with the United States can't be underestimated.
You're 100% right, Tom. We don't do it very often. Maybe we should do it more often. European stocks are sleeping, Tom. Euro is gaining before the ECB meeting, and that's probably, the question of the day. The central bank is widely expected to keep policy steady, but investors will watch out for any comments from the ECB president for any hints on whether the stronger euro is becoming a problem for the region. And then I also wanted to show you pound 130.20. If you look at other asset classes, so crude oil is declining and treasuries are gaining. Now, joining us now to talk FX, we have quite a lot to talk about euro and pound, is Jeremy Stretch, CIBC head of G10 FX strategy. Jeremy, always great to speak to you, especially on a Thursday morning on ECB day. Will, central bankers don't talk about the exchange rate, but will there be hints from the ECB because euro strength is becoming problematic?
Well, you're absolutely right. It is the topic that central bank governors like to talk about least. One suspects that when Christine Lagarde is questioned in the press briefing, there will be a question about the valuation of the currency. And she will no doubt push back with the usual mantra that the ECB does not have an FX rate target. But of course, it is implicit in terms of their inflation assumptions. And the staff forecasts are likely to be revised down a tick or two in terms of those inflation biases. But I think we shouldn't lose sight of the fact that despite the tightening of monetary conditions because of the strength of the euro that we've seen since the June forecasts, if you look at the five-year inflation swap for the eurozone, it is similar to the sort of levels that we went into the crisis at. So in a sense, yes, the ECB are mindful of the currency, but I don't think the president will want to try and stress it too explicitly. But nevertheless, I think she will try and be as dovish as she can to try and preclude immediate and further strengthening.
Jeremy, what does that mean? Are we going to have hints of, possible interest rate cuts this year?
Not so sure about that the ECB is considering or would validate further interest rate cuts, and I think there's a debate about the efficacy of the negative deposit rates, in particular in terms of Germany. So I think it's more likely that the ECB will be providing at least some steer towards an increase of the PEP envelope probably by the end of the year. I think the interesting point is, and one of the reasons why the euro has rebounded from those lows that we saw yesterday, were some of the source stories regarding uptick in the growth targets for 2020. And whilst that is probably going to be the case, I think the key metric could well prove to be the assumptions for Q4 activity, because if that does prove to be moderated from the 3.2% quarter-on-quarter gain that the ECB are assuming in June, then I think that can open the door for some degree of additional bond buying and extending that bond buying program out to the end of next year, and that will be a means or a mechanism to try and preclude significant euro gains from here.
Jeremy, what is the fiscal exposure right now in Europe as compared to the United States? We're in an uproar in the United States about a growing debt and a growing deficit. Is the same tension there for President Lagarde?
No, I don't think there is. I mean, now clearly we've seen some degree of substantive fiscal loosening, and indeed that black zero policy, which of course has governed German economic policy for the last decade, has now been moved aside. So there has been a significant increase in fiscal expenditure, and there is a fiscal gap which has been opening as a consequence of the COVID crisis, as we see in all markets. But I'm not sure necessarily there is that same degree of concern. And of course, what we have seen is that the actions of the PEP program have dealt with some of those fragmentation risks. So those spread differentials have obviously compressed in the periphery versus the core in terms of bunds. And so we have seen a tightening in things like BTP bund spreads from the wides that we saw back in March. And so I think the Eurozone is not facing the same degree, or the ECB is not facing the same degree of criticism perhaps we see in other markets.
You gave me the answer I wanted to hear. Jeremy Stretch, what are her degrees of freedom today? If she gets up there, does she have a greater set of toolkits than Chairman Powell has?
I'm not sure she has a greater set of toolkits, but I think we are in a scenario where central bankers are continuing to plead with the policymakers to suggest that there is more latitude in terms of a recovery phase from the fiscal dynamics than there are from the monetary ones. And in a sense, I think the ECB has given themselves some leeway by that PEP program and the imposition of that, which is, as I say, has dealt with some of those fragmentation issues. So I'm not sure she has more latitude, but I think the ECB will continue to implore, as it has done consistently, that national governments are still required to put their shoulders to the wheel and provide additional stimulus going forward, because monetary policy is already ultra loose, and there are some degree of limitations as to how much further they can take that, certainly in terms of consideration of the deposit rate.
Jeremy, how worried are you that the recovery that actually started quite strong in Europe is slowing down significantly?
Well, it's true that the Eurozone did have an early recovery, in particular compared to, say, North America, for example. So that was good news. And one of the reasons why the growth numbers will be revised up for 2020 was the shallower contraction in Q2 than the ECB and the market perhaps had considered. Yes, there are issues in relation to the resurgence of COVID cases across the continent and the impact that that has in terms of national shutdowns. And so I think there is going to be a degree of moderation, and clearly the incremental economic gains from here are going to be much more challenging. And that's why I think there's an important dynamic in terms of that Q4 GDP dynamic, because we know that Q2 and Q3 was perhaps a little better than we'd assumed, but I think that probably comes at the expense of Q4 and into 2021. So I think the V-shaped recovery that, of course, we all hope for, I think that right-hand axis, or the right-hand dynamic of that V, is going to be a little shorter and shallower than perhaps the policymakers would like.
Jeremy, thanks so much. Jeremy Stretch there of CIBC stays with us now. Coming up on Bloomberg Markets, Paolo Gentiloni, he's European Commissioner for the Economy and Financial Affairs. That interview at 11:30 a.m. in New York, 4:30 p.m. in London. You don't want to miss it. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Surveillance. Good morning, everyone. This day of the European Central Bank. We'll have full coverage for you through the morning, the important decision, and then that press conference as well with Christine Lagarde. Francine Lacroix in London. I'm Tom Keene in New York. All the talk in Washington is a book, Rage, by Robert Woodward. It is a book with 18 interviews with the president. Nothing like the rage in the United Kingdom right now over Prime Minister Johnson and Brexit, I believe is what it's called, if my memory saves me. Jeremy Stretch with us with CIBC. Jeremy, for our global audience and Americans like me, where this is just off the radar, what is the rage over what Prime Minister Johnson's doing with Ireland and Northern Ireland?
Well, of course, one of the tricky issues about the Brexit divorce process does relate to the island of Ireland, which of course is broken up into the northern part, which is part of the United Kingdom, and the southern independent part, which of course is going to remain a member of the European Union. So it's the trade relationship, or the trading relationship, between the north and the south of the Irish island, which is causing consternation, because of course that would encounter goods going across a border which would have different tariff regimes once the UK has left the European Union. That had seemingly been agreed under the withdrawal bill and withdrawal agreement last year, but now the UK government are seeking to unpick some of that and unpick some of the unilateral international law that has been agreed, and that I think is one of the issues which is really enhancing the risks of a no-deal scenario, and hence the reason why sterling's been under so much pressure in the last couple of days.
Here's what outsiders like me say. Are you kidding me? Just say no. Why doesn't Europe just say, no, we're not going to do that?
Well, Europe could do that, but of course that would also come with an economic cost to them, because whilst the UK is at risk of a disadvantage in terms of the greater near-term impact from economic dislocation from a breakdown in negotiations, there would also be dislocation and downside risk for the Eurozone economy as well. And for the two nations which are highly correlated in terms of their trading patterns, it isn't sensible to build and institute trade barriers if you can avoid it. Now, it's interesting that obviously the European Union didn't immediately break off those trade negotiations or Brexit talks yesterday, which was the good news, and perhaps that encouraged a little bit of lightening of sterling selling. But of course, there is still an increasing degree of risk that the talks will break down ultimately, and the UK will be heading towards that no-deal WTO type trade arrangements from the 1st of January, and that of course would have some negative implications for UK macro activity as a consequence.
Jeremy, what would that do to pound?
Well, of course, once through the course of this week, we've been dusting off our no-deal scenarios in terms of sterling once again, and normally you would think that there is something in the region of a 10 to 15% depreciation risk from sort of a peak to trough move in terms of sterling on a absolute no-deal scenario. So clearly that would take us back to sub 120 against the US dollar in that particular context. But of course, we're also talking against an environment where the Fed are actively easing monetary policy or keeping monetary policy loose and trying to cheapen the dollar. So I think that a better way to play Brexit risks, at least in the short term, may well be looking at crosses like sterling yen. And I think that's one where there's a little more traction. And I think we can easily see a sizable move lower in terms of sterling yen because of the dynamics of markets starting to discuss this probability of a no-deal exit risk with more vigor.
But Jeremy, how difficult is it to see whether this is a bluff or this is for real?
Well, of course, that is the problem. So we are talking about politics, and we are talking about a very high stakes game of poker. Now, I think the European Union always knew that when we had the previous Prime Minister, Theresa May, that she would give ultimatums, but ultimately would always fold under pressure. The question is whether the European Union are believing that the similar scenario will play out. Now, of course, we saw something similar with the withdrawal bill a year or so ago when the UK decided to accept some of the ramifications of the Irish border issue, which they're now trying to unpick. But it is a very high stakes game of poker, and of course we have this with the ravages of COVID behind it, and the UK has suffered more than any other G7 nations in terms of the economic downside. So there is a very high stakes game of poker here. Political pragmatism has always been our sort of benchmark in assuming that there would be a deal eventually agreed. However, that deal will be increasingly limited in scope. But that political pragmatism does seem to be in incredibly short order as we speak. And so that's why these no-deal risks are once again on the rise.
Jeremy Stretch, thank you so much. With CIBC, head of G10 FX strategy. And this was sterling 130.26, the euro 118.30. It has been a most interesting 4 years for Mr. Barrack of California. He has had an extraordinary moment in real estate and also in politics, his support of the President of the United States. A conversation with Tom Barrack coming up. Stay with us. This is Bloomberg Futures, negative 13.
Okay, we close position on euro at 118.30. Just right here. Where is it? 130 right here, and the arrow is here. Okay, position closed.